Hi guys, it's Oleg Tkach here with your weekly rate update. And the Fed met this week. Basically, they did not cut rates, they didn't raise rates, they kept rates the same. And we're all expecting them to leave rates unchanged. But the biggest part and the most important part was, what are they going to say about future rate cuts? What are they going to say about the inflation reports that just came out the previous week that showed way higher inflation? And so Fed Chairman Jerome Powell pretty much came out and said, we expect it to be bumpy. He's not really concerned about last week's inflation reports, and he says that we still believe that we're going to cut rates 3 times this year. In fact, 10 out of the 19 chair members voted and believe that there's going to be 3 rate cuts still happening this year. However, he said that those cuts are not going to happen anytime soon. Well, if you look at it, what does that mean? That means we're definitely not going to see a rate cut in their July meeting. Most likely, we're going to see them start cutting rates around the elections, October, maybe November, maybe December. Overall, it was a rate-friendly meeting, and all the comments were rate-friendly. Everybody that was, betting that cuts were going to be off the table, they were wrong. Everybody that was betting that, the Fed might even have to hike rates again or might start talking about hiking rates. Mr. Powell said nothing about hiking at all. All he said is we're going to have to hold for longer and watch for longer. So overall, very, very rate friendly. He said that it's going to be bumpy. What does that mean to us? Well, I believe that based on the last meeting, it means that we've probably seen the highs. I think that it's safe to say that we probably are over the highs. I don't think there's a chance that rates are going to go into the 8s again like we saw last year. There's rumors about them going even into the 9s. I think that's behind us. I do think we've entered into kind of a new normal range, which is going to be between 6 and 7%, between 6.5 and you could say 7.5, depending on different reports, different data, and so forth, which is actually a really, really good thing. And I know I've been saying this for some time, but if rates were to drop dramatically, and when they drop dramatically, I think everybody in real estate knows the bidding wars are just going to intensify. And from us hearing from a ton of our buyers that are making offers right now that they're up against, 4 or 5 different offers. They're up against, like one person told us yesterday, 19 different offers. And people are just bidding aggressively. If you look at the fact that our inventory we still have a low supply of inventory and how many people are out there looking, which is a ton of people, and making offers. If rates were to come down sooner than later, we could see home prices skyrocket even more. So therefore, as a buyer, this is probably a good thing for you because it's going to extend out the time that you have to find a home, make an offer, get a home under contract, and then refinance in the next few years, because there are still 10 rate cuts planned in the next 3 years. And when those start happening, unless inventory happens to shoot up, we're going to see prices continue to climb. So there you have it. That is your weekly rate update. Let us know if there's anything we can do for you. We do have weekend coverage. Until next time, we hope you have a good one.